Hello everyone and welcome to this week's watch list preview. Pretty big watch list this week. I see a lot of pretty nice looking charts as long as this bounce continues. I was trying to find stuff to the downside just in case we do pull back, but I really don't see anything. Nothing that looked very good on the downside, so we'll have to see what happens next week, but everything I have here is all stuff to the upside. So and they're pretty nice looking charts. Some of them you do have to be careful because the longer time frames are pretty nasty looking. So my plan is to buy a little bit of time on these, buying maybe monthlies, maybe the February 18th expiration. So I have a little bit of time because these things may bounce around a little bit. And if we do have a nasty sell-off Monday or Tuesday or whatever day, we have enough time to get out of it without getting crushed. And keep in mind also we're still in earnings season, so we have that to fight with. So, but I didn't see much that looked good on the inside weeks, but I found two for the hammer and quite a few for the two down with the green close. Now, if you look here, I have McDonald's listed twice, so I'm only going to cover it once. I'll briefly touch on it, showing that it's a hammer, but SPY is also in here twice, so the list isn't quite as big. You can actually take these out, eliminate these, and all we have is these then. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We have 10. What I would suggest doing is going through that list of 10 and find ones that you like or don't like and separate them to twiddle down your, is that a word, twiddle your thumbs, I don't know, to dwindle down your watch list so you don't have 10 unless you're comfortable with watching 10 different ones. For me, that's a little bit too many. And there were other things on here. Amazon was on here. I think it had earnings this week. That's why I left it off. There was a couple other ones that were on here that had decent looking charts. They were just things that I don't usually trade, or I know has bigger spreads. So I left them off of here just because there were so many. We had to had to narrow this down somehow, or I would have had 20 or 30 on here, and that's just not manageable. So hammer candles, let's take a look. And like I said, some of these are on here twice, and the hammer candle is one. If you look at the weekly, we have a hammer on the weekly, but it also fits into the two down with the green close. So we have a red candle here, we have a two down with a green close. So that's why it's on here twice. Same with SPY, same thing. So, we look at SPY, same scenario. That's not actually a hammer. It's not technically a hammer. In fact, what was it, McDonald's? McDonald's may not have even technically been a hammer, but you get the point. It's a bullish potential reversal. McDonald's, I'd say that's not quite a hammer. A hammer means the tail has to be at least twice the length of the body. Right about there is the middle. I don't think that's quite a hammer, but you get the point. It's close enough that it still represents the same psychology. So let's move on to, these are the two that I have for the hammer candles. Now, I'm not going to cover these right now. I'll cover them when I get to them on the two down with the green close, so I can kind of keep my rhythm going here. By rhythm, I mean I'm not bouncing all around. So, Apple, not too bad on the year. It's red, it's down, but it's two up. Quarter, kind of the same thing. It's more bullish than bearish, but it's not real strong bullish. On the month here, kind of the same thing on the month. We did come down and test this 9 SMA. Then you take a look at the week here, and this is what we're looking at. So had a very strong week. Earnings is out of the way. So we're looking for a break above 170.35. And then we come down to the daily to pick up some targets. First target's here at 171.08. Yeah, that's only a 70-cent move, but like I said before, I set targets with not necessarily being where I'm going to sell, but somewhere that I know I can move a stop to. So obviously if we hit 171.08, I'm not going to put my stop at 171.08. At that point, I may move my stop up to maybe right about here, maybe about the high of this candle here once we break the 171.08. Once we break 172.54, probably going to put my stop closer to here. The other way is you can trail your stop, like for example over here. After this candle's done, move your stop to here. After this candle's done, move your stop to here. After this one's done, move it to here, and so on. So there's a number of different ways that you can manage your stops. I'm just throwing a few out there. So, but that's why I put a lot of times why I put these levels in here. It gives you a place to, you know, on the dailies or the weeklies. I mean, if this thing triggers Monday morning, 70 cents, you're still going to make a decent amount on a trade going, you know, that 70-cent move. But you know, it gives you a place to move your stop. Like I said, if we break this level, break this level, break this level, gives you somewhere to put your stop. So first target's 171.08. Second target is 172.54. Third target's 173.78. Fourth target's 176.62. Fifth target is 177.18. Sixth target's 180.17, and the seventh target's 182.94. If you go back and look at the weekly, your ultimate target would be right here, based on this 2-2 reversal. It's here, but that's pretty close. I think here would be more reasonable. But that's what I'm looking at for Apple. Now SPY. Like I said, we already touched on SPY briefly. Very similar to Apple. It's a little bit worse on the year, worse looking than Apple. The quarter, same, just a little bit worse. Month, the month is pretty nasty looking, and that's why you got to keep in mind. But you also have to keep in mind that any reversal that you see on a big pullback like this, all reversals start on the lower time frames. You know, this reversal here, you would have been the monthly chart would have looked pretty ugly here. If you had said, I'm not getting in on this reversal here because the monthly chart's ugly, you missed all this. Every reversal starts out on a smaller time frame. That being said, you also have to be careful with it because you don't have full time frame continuity. So you have to be careful with your stops. So on this one, we're looking to break above 444.04. Come down to our ultimate target would be right here, the high of this candle at 459.96, which is a pretty good size move. But if you come down to the daily, target one is here at 448.06. I don't think you guys can hear that alert, but man, it's annoying me. I hope you can't hear it. I thought I changed the settings in the software to not do that, but anyway, target one's 448.06. Target two is 458.74. Target three is 459.61. I didn't put a target here because it was so close. 459.96. That's only 30 cents above the previous target. Target 4 is 465.09. Target 5, 472.88. Target 6, 477.98. And target 7 is 479.98. Normally I wouldn't go this high on targets because that's a huge move. That's almost a 10% move. But given the sell-off that we've had, a lot of times these things bounce back really quick. So we may get, we may not get up to here this week, but we could very realistically get to here, maybe even here. As quick as these things bounce, sometimes when this happens, we very well could see some big moves this week. I don't want to get everybody too excited because you also have to keep in mind every bounce we've had lately has been followed by sell-off. So we may gap down 500 points Monday. So we don't know. We'll have to wait and see. Okay, Qs, very similar to SPY, obviously, which it usually is. It's an inside year red candle, not looking too good. Quarter is looking pretty ugly. Month is looking pretty ugly. And take a look at the week. Nice little bounce here. See if it holds up. Triggers 356.88. Come down to the daily. We're looking at 362.18, 373.87. I ignored this one again. 376, and maybe I shouldn't have ignored it. It's a dollar move, maybe 80-cent move from here to here. But when they're that tight on this big of a move, that 80 cents I think would go pretty quick. So that's kind of why I ignored it. 376.22, 380.35, 389.47. That's our targets for Qs. IWM. Take a look at the year. Pretty nasty looking on a year. Nasty looking quarter. Nasty looking month. Kind of like a repeating thing here. Spinning top here on the weekly. This is probably one of the least favorites of my charts this week. If I were going to eliminate some from my list, this would probably be one of them. I just don't like the chart as much, but it does have potential, so I would have really tight stops on something like this. Break above 203.55 is our target. Come down to the daily, and our first target is this pivot high at 203. Actually, that's our trigger, 203.55. 208.99 is our first target. 212.44, 214.40, 218.19. We could have put one in here, but I skipped that one again. 220.38, 225.91. Obviously, there's another target up here. You can put these targets in if you'd like. I didn't. I don't think I'd hold it to this far of a move. That's over 10%. I'm sure I'd be out by then. I'd say this pivot high would probably be about where I would be getting out. This one here, as long as I didn't lose momentum before that, this would probably be the longest I would hold. Not saying it can't go up to here, but because that's a pivot high right here, that'd probably be the longest. And I always sell early, so I'd probably be selling at this one. So that's IWM. NVDA. Take a look at the year. Inside year, red candle. Not looking too pretty. Inside candle on the quarter. Big red inside candle, not looking good. The month, 2 down, following an inside candle. Not very pretty there. The week, spinning top again on the week. And you may say, why is this one any better than IWM? Well, if you look at IWM, the 9 and 21 have already crossed. It's red. in or below the 50 SMA. If you look at NVDA, we haven't crossed yet, although we probably will, but we haven't crossed yet, and we're still above the 50 SMA. That's where the difference is between this and IWM, that I feel a little bit better about this one. We may get a cross here, but if we can pop back above there before it crosses, this cross, remember this is a weekly, this cross won't happen for at least 2 to 3 weeks. We're only looking at this week for this trade. So this won't have crossed by the end of this week, most likely, unless we gap way down. And I still don't think going back 9 periods would be enough to drop it down below the 21. So 240.57 is the trigger, followed by target of 248.23, then 255.79, 265.43, 271.97, and 284.80. And obviously you can continue if you wanted. You could go here, 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 and here. That's up to you. I didn't go that far. At some point you have to say, okay, where would I be all out of this by? That gets us way up to here. If you wanted to continue, you could look at the pivot highs. You could even maybe, if you bought far enough out, you can maybe even look at the top of the broadening formation on the weekly here. It's really up to you how far you want to hold it. For me, I'd probably be out because I'm not going to buy 10 contracts and I'm not going to have enough contracts to have 1 or 2 left by the time it gets up to here. I'll be all out by the time it gets here. I won't have enough. I don't trade that big of sizes. Microsoft, especially with the premiums the way they are right now. And by that I mean the premiums are kind of jacked right now. They're juiced up. One is because of earnings, and 2 is because of all the volatility going on. The IV is really pumped on these things. So on the year, not quite as bad as the rest of them. It's inside, it's red, but it's not as bad as some of the other ones we've seen. On the quarter, same thing. It's a 2 down, but it's bouncing back up. It is red, but it's not as bad as some of the other charts. And that's what you want to look for. You want to look for things that held up better in this downturn than some of the other ones, because they may provide the biggest bounces. On the month, kind of bounced, 2 down, not a very pretty looking candle. On the quarter, or on the week, I mean, we had a nice big green candle here. Came down, tested this 50 SMA, bounced off of it. No, I shouldn't say bounced off. We did poke down below it and then bounced. We kind of tested this pivot low here in this 50 SMA and bounced back up. So our trigger is 308.50. Come down to the daily to look for some targets. First target's going to be 311.65. And you see these are some nice big moves. That's a $3 move just to the first target. A lot of the videos I do, first target's less than $1. So that's another reason why I said buy yourself some time, because your stop is going to be much larger than it normally would. Your stop may be normally 50 cents, maybe $1. Where on this, your stop's going to be $2, $3 because the moves are so much, they're magnified. So it's going to be a much bigger move. Granted, your targets are going to be a lot bigger, but I worry more about my stops than I do my targets. So anyway, target 1, 311.65. Target 2, 313.91. Target 3 is 320.88. Target 4 is 323.41. Target 5. Oh, I have 2 targets here. That's why. If you see this, I have 2 targets. There's actually a gap right here. It's very little, but target 5 is 326.07. Target 6 is the gap fill at 326.12. It's only a 5-cent gap, but it's still a gap. So that's Microsoft. Next one is Disney. Disney I was going to scratch off my list, but I like the gap here. This is the daily chart. Aside from that, I was thinking about scratching this off my list. The year doesn't look good at all. And I know there's a theme here going through these charts. I say the year doesn't look good, the quarter doesn't look good, but show me a chart out there where it does this year. Unless you're playing something that's inverse, or maybe gold. I didn't even look at gold. They're all going to look bad. So on the quarter, not good at all. On the month, not good at all. Outside month. The month ends Monday. We only have 1 day left for the month, so keep that in mind. And that'll maybe open up more opportunities once February starts. Something like this, no, not likely, because we have. I'm not going to say not likely. It's going to take a while to go 2 up on the month on this one. For any actionable signal on this for the monthly chart, it's going to take a while. And that's what I mean by that. So, and the reason why is because look how far we have to go. Granted, the moves are bigger, but we need to go 138 to. We need a $22 move to trigger an actionable signal on this, unless we have an inside month, and then we're looking at March. So either way, the first week of February, we're probably not going to get any actionable signals on monthly chart on most of these. Weekly, I do like the weekly. Earnings is on the 9th, so we have all of this week. We may get a run up on earnings. How earnings be, who knows? Earnings hasn't been great for a lot of companies. Apple blew it out of the water. So I don't know. We'll see. But I do like the weekly chart, or the weekly candle at least. I like the weekly candle for reversal and possibly run up in earnings. So trigger is 138.63. Come down to the daily, and this is what I like. Here's our trigger. And then we have target 1 is going to be, there's our trigger right there. You ignore this white line here. This white line is for the yearly chart. So our trigger is 138.63. Target 1 is entering the gap here at 141.87. And then target 2 is the gap fill at 147.15. That's one thing I like about this chart. If we can break through that target 1, we got nice run room, $5 move there. So that's Disney, Nike. Take a look at Nike. On the year, inside, red, not looking good. On the quarter, not looking good. It's 2 down, big red candle. On the month, another. Yeah, I think our swim's going to run out of red crayon here pretty soon. But on the month, not looking good at all. On the week, not the best weekly candle. If I was going to scratch anything off my list, this may be one of them. But again, we have a gap there on a weekly. So our target, or our trigger, is going to be 148.97. And we come down to the daily. Let's see if that gap's there. Yeah. Target 1 is 153.60, and that starts the gap. Target 2 fills the gap at 156.86. That's the only thing I like about this chart. Aside from that, I don't really care. The daily candle doesn't look too bad. Nice hammer, but we're kind of stuck in this range here. Granted, the trigger is going to be breaking out of this range, but even on the weekly, this isn't the prettiest candle here. So if I was forced to take something off my list, Nike may be one of them. Not saying it can't pay out well, but if you have to narrow your list down, you're not comfortable with having 10 things on there, that's one I'd probably consider taking off. On the year, McDonald's, not as bad as some of them have been. It's a 2 up and it's red, but it's not as bad as some of the yearly charts have been. Quarter, we're 2 up, we're red. Kind of bounced a little bit recently, so not quite as bad. On the month, we bounced right off that 9 SMA almost perfectly. Where I was trying to find out what the 244.50 and the low was 245.25. So within 75 cents of touching that 9 SMA. Still not looking good on the monthly. Nice hammer candle on the weekly. I do like this candle. So we're looking for a trigger above 256.35. Come down to the daily. Our ultimate target would be, this would be our initial target, but ultimately I'd like to see it up here. But let's take a look at the daily. Target 1 is 258.46. Target 2 is up here at 261.24. Target 3 is up here at 263.85. Target 4 is 266.72. We do have a little bit of a gap here. Not much, but there's a little bit of a gap. So you could technically put a target right here also. And target 5 is 270.17. That's what I'm looking at for McDonald's. Lowe's, another one. It's not too bad on the daily. The weekly's not bad. Let's take a look at it. Home Depot, it was on the list also on my scan, but I didn't like it as much as Lowe's. So on the year, inside down or inside red. When I say inside down, that would mean that there was an inside candle followed by a 2 down, and I don't want to confuse people by saying that, so sometimes I'll say inside down, but what I mean is inside red. On the quarter, another inside red, still kind of bouncing back up a little bit. On the month, came down again. 217.79 was the 9 SMA. 217.79, we came down to 220.20, so 40 cents away from touching the 9 SMA. And bounced right off of it. So that's the month. The week, I like this. It's almost a Maribozu candle. If you're not sure, if you don't know what a Maribozu is, I might be saying it wrong. Maribozu candle is a candle that has no wick and no tail. It's just a big rectangle. The open and close were the highs and lows. So this one here, it's not quite. The low was 30 cents below the open, and the high was 15 cents above the close, but it's real close to Maribozu. Maribozu candles are very bullish or bearish. Bullish or bearish, depending on if it's red or green. So I do like that. So if we come down to the daily chart, our trigger's 235.14. Come down to the daily, and right here we have target 1 at 237.59. We have a small gap here on the daily, and target 2 is going to be 241.16. Target 3 is a gap fill at 241.47. Target 4 is going to be 248.70. Target 5 is actually a gap fill here at 250.09. and you could continue on and keep going with targets. So that's what I'm looking at for here. This one, 250.09, because 250 is a psychological number, I'd be selling closer to the 248.70 anyway if it got that far and I was still in it. So that's what I'm looking at for this week. Again, I'm going to take some of these off my list personally just because I don't want it. When I get too many things triggering, I tend to start bouncing around, and by the time I figure out which one I want to get in, I missed them all. So I don't like to have more than maybe 5 on my list. So I'm given the option here. There's 10 of them. Pick what you like. Like I said, I'll probably remove. I think it was Nike. IWM, I think, was one I said I'd probably pull off my list. I'm going to go through and dwindle. No, I just made up another word now. It's too early. Dwindle down my list a little bit more for myself. I'll leave it out there. Let each person, if you want to go through and pick what you like. But like I said, if we continue to bounce, if we continue going up next week, there's these things can really be some nice trades. So keep that in mind, but also keep in mind your stops. And remember, the moves right now are very exaggerated. We're moving enough in a day, as much in a day as we would normally move in a whole month. We're getting 400 or 500 point moves in a day, and we don't usually see that in a whole month. So to look at a monthly chart right now probably doesn't make a lot of sense because of how big the moves are. The weekly even can be pretty big move. If you look at SPY weekly, how big was the move this week? Let's see. The low was 420, the high was 444. $24 move, that's 5%. So we had a 5% move this week total on SPY. That's from the high to the low. $24 move on $430. It opened at 432. So you're over 5%. So 24 divided by 432. Yeah, 5.5% move. So yeah, that's a big move. That's more than we get in a month a lot of times. You look at the monthly chart, and a lot of times, the monthly chart here, high was 441, low. We only had a $21 move or $20 move on this. All these months here are similar. Only had a $20 move on the month. We had 40 some dollars this month or this week. So we had double what we usually get in a monthly move. So anyway, keep that in mind. Just be careful. Keep your stops. If you're not comfortable, just sit out. Wait till this thing settles down. There's a couple different ways you can trade these. One is by the weeklies, something kind of far out of the money. Like let's say, for instance, SPY. You buy the weekly expirations on SPY. Maybe let's just say the 475 calls. You could probably get those pretty cheap, maybe under $1. So your risk is only going to be $100. The reward could be possibly $300-400 if you're comfortable with losing that 100. Not that you have to lose the whole 100, but even if you put your stop at 50%, you lose $50. That's better than going out and buying a 450 call and spending $800 on it and potentially losing $300 on a stop. So that's one option. Another is just to buy more time. You could even buy the March expirations because the moves are so big that you'll still make enough on a March expiration as you normally would with a weekly expiration, and maybe not a weekly, but a monthly expiration, um, because the moves are so big. The downside of that is if you buy something for, like, say, March expiration, you might be paying, you know, $15 a contract, which is $1,500, and then a 10% stop is going to be a $150 loss. So you could be looking at a bigger loss dollar-wise that way also. You just have to see how much the premiums are and see what you're comfortable with. But that's a couple of schools of thought on how to do it. Myself, I kind of do both. On Fridays, I typically trade 0-day expiration. They expire that day, and till a little bit later in the day, then I'll buy the following weeks, depending on how volume is. But yes, I know this past week I bought some that I would normally trade weeklies. I bought February expirations. So it really depends on the movement. How, if something's not moving much, if you're trading in a tight window, and I know, there's not much of a tight window nowadays with what's going on, but if you're trading in a tighter channel, a choppy day, number one, you really don't want to be trading on a choppy day. But if you do trade on a choppy day, you don't want to buy something that's a month out, because you might only get a 2% move, not 2% on the underlying stock, but 2% on your contract. If you paid $1,000 for a contract and it moved 2%, is it worth risking that for a $20 win? So you got to factor that in. That's why I've heard it said before, if stocks are two-dimensional, options are five-dimensional, because there's so much to factor in there. But anyway, this drug on long enough. I'm gonna get going here. Thanks for watching. Hope everybody had a good week. Hope everybody has a good week coming up. And thanks for watching. See you later, and bye.